Hello everybody, welcome to today's fundamentals. Hello Peter.
Hello.
A new day, a new week. What's up in the markets?
Well, we saw actually the US dollar edging slightly higher on Friday. Nothing much, but still there was an upward movement which should be noted. I would be most probably highlighting also the fact that we had the preliminary University of Michigan consumer sentiment on Friday, which was better than expected, clearly better than expected. May have also contributed somewhat to the strengthening of the USD. But the main interest of the day for Friday was, I think, the Canadian employment data for January. We had a stellar employment change figure of over 150K. We had a tick down of the unemployment rate to 5%. And all of that tended to highlight exactly the tightening of the Canadian employment market. The loonie rallied as a result of that, and most probably BOC is going to be renewing its hawkishness, given that the employment market remains tight and allows it to proceed with further rate hikes if it wants to. Other than that, I would also be noting that we had the GDP rates from the UK, and it was interesting to note here that more or less, I think that's going to be having an adverse effect on BOE's monetary policy tightening, in the sense that the bank may downshift its rate hikes or even at some point start pausing. I would also note that we had from Japan some developments regarding Bank of Japan. Practically the new, or at least the expected to be new governor Ueda is not exactly expected to start overhauling radically the bank's ultra-loose monetary policy, and that tended to weaken JPY. Last but not least, I would be noting from Switzerland the release of the CPI rates during today's early European session. We had an acceleration beyond expectations. I think it reached 3.3% year on year, a rate which more or less could intensify the hawkishness of the Swiss National Bank. And I wouldn't be surprised to see that being reflected also on CHF over the coming days.
And how about the US stock markets?
Well, US stock markets send out some mixed signals. I would be noting that, okay, definitely the earnings season is still on, but I wouldn't have been singling out any high-impact, high-profile companies which are due out to release their earnings reports today. So more or less we may see fundamentals taking over, and we may see more or less, I would dare to say that financial data, earnings reports, etc., taking a back seat regarding the market's mood. Should the market mood actually improve and we may see some more risk-on oriented market sentiment, we may see your stock markets rising just a bit.
And how have gold prices been behaving?
Gold prices more or less seem to be unable to actually take advantage of the US dollar's activity. They remained also in a rather sideways motion, nothing much here. I would be noting, besides gold's inactivity, also oil prices. We have an element in oil prices where, despite actually Moscow, Russia, warning that it will be cutting production by 500,000 barrels per day, they still weakened. And that's a result of the expectations of the market that a slowdown of the US economy and in general of economic activity on a global level may be coming ahead, which may also have an adverse effect on the demand side of the commodity.
And what's on the calendar for today?
Nothing much, actually. We have a very easygoing Monday. We have already the Swiss CPI rates. I would expect, as we have mentioned also for stock markets, fundamentals to take over. So I would be noting speakers and especially Fed policymakers. We have a number of policymakers. Among them, we have Dallas Fed President Logan. We have Philadelphia Fed President Harker. And I would be also noting New York Fed President Williams. All three of them could make statements which could alter the market's direction. And during tomorrow's Asian session, we are getting from Australia the consumer confidence, business conditions, and business optimism indicators. The first one is for February, the latter two are for January. The highlight of the day, though, for tomorrow's Asian session is expected to be Japan's GDP rate. It's for quarter four on an annualized basis. It's expected to accelerate from minus 0.8% to 2%. And that's a substantial jump, which could provide some support for the yen.
And how about the rest of the week?
We have a number of financial releases. Definitely the highlight is expected tomorrow. It's expected to be the release of the US CPI rates. It's for January. Further deceleration of inflationary pressures in the US economy could improve market sentiment, cause some safe haven outflows for the greenback, while US stock markets could be on the rise. I would be noting also the pound. We have a number of releases in the coming week which could be affecting the pound. The first would be the employment data for December. They are due out on Tuesday. I would also be noting, though, the CPI rates for January on Wednesday. I think maybe because of the cost of living crisis in the UK being the main issue, I think traders will be focusing on Wednesday's CPI rates of the UK. Should there be an acceleration or even a very slight deceleration, we may see the pound getting some support. It was characteristic last month when the CPI rate slowed down but very little. That caused the pound to accelerate because it more or less proved that inflationary pressures are still alive and kicking in the UK. And that would make or may force BOE to harden its monetary policy tightening stance. I would be noting also on Friday from the UK the retail sales growth rate, which could could shake the pound a little bit. Other than that, I would be noting from the US the retail sales growth rate. I would be noting also from Australia on Thursday's Asian session the employment data. Now we had an RBA, the Reserve Bank of Australia, which more or less declared its hawkish intentions in the last interest rate decision. However, practically mentioned that it will also be looking over the inflationary front as well as the employment market. Should the employment data show that there was a tight employment market in January as well, that could boost the confidence of RBA and allow it to proceed with more rate hikes.
Great. Thank you, Peter, for your time and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation for today. My name is Peter Iosif, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour time frame. And all charts to be presented, unless otherwise stated, are to be of the same time frame, the 4-hour one. Now, with no time to lose, let's readjust the US dollar index chart. Here we go. Now we see that practically the US dollar index has been on the rise despite some correction lower. That was on Friday. Let's have a look. Yep, in Friday's European session. Overall, the movement upwards was continuous, with this exception here. And it was characteristic that it once again slowed down as it has hit the upper Bollinger Band. The RSI indicator has risen. It's currently at the reading of, let's have a look, 61, almost 62, which tends to imply some bullish sentiment. For the time being, though, let's make the necessary corrections, and definitely the R1, as it has been broken to the upside, will have to be changed into support line, switching its role. Let's go hunting for a new ultimate resistance line. Unlocking the chart. Nice peak here. However, pretty low in my opinion. Yeah. I would be choosing this one. It's an interesting level because at this point there was a nice clear upward movement which found resistance here and remained stable for a period of time, a number of days, before actually being able to break above it clearly and move higher. So that would be, in my opinion, a valid resistance line at the 109 level. I would be noting though that we had another peak here, so we have another 2 additional future resistance levels. Okay, let's readjust the charts, correct the labels. There you go. Setting the R3, repositioning the R2, the R1, the S1, S2, S3. S2 being placed now at 101.30. The S1 at 103.50. The R1 at 104.55. The R2 at 106.80. And the R3 finally at 109. Locking everything in. We tend to maintain our bias for bullish outlook here. And for it to change, I would require a clear breaking of the upward trend line we have just drawn, possibly a testing even of the 103.50 support line. Should the price action drop, break the upward trend line, bounce on the 103.50 support line though, that would imply a possible sideways movement in our opinion. While should the price action break also the S1 and start aiming for low grounds, that would be a signal for a bearish outlook in our opinion. For the time being though, we tend to maintain a bullish outlook. Some correction lower may be in the cards, I wouldn't be surprised. And I would expect the RSI indicator to rise further should the bullish outlook maintain control over the index. Let's move now to Euro USD. The reverse mode most probably, yep. Interesting chart in the sense that we have a reversal and stabilization. But definitely the 1.0 0730 has to be switched from a support line to a resistance line given that the price action has broken clearly below it. Let's go hunting. Nice throw. Yep, this level, see how it provides support here and here in green, and that would be the 1.03. Okay, 1.0305. There we go. Nice touch. Readjusting the chart, correcting the labels, repositioning them at first. Starting with the R3, now being placed at 1.1005. Sorry, 1.1055. The R2 being placed at 1.0935. The R1 at 1.0730. The S1 at 1.0580. The S2 at 1.0435. And the S3 at 1.0305. Locking everything in. Let's discuss direction. A, the downward movement seems to have been interrupted as the downward trend line has been broken. The RSI indicator, though, still remains at rather low levels, so a bearish comeback is possible. For the time being, though, we tend to switch our bearish outlook in favor of a sideways movement bias, given also the low volatility of the pair. Note how the price action practically stopped dropping after hitting the low Bollinger Band. It was very characteristic. I would be expecting the sideways motion to continue for the time being. Should the bears take over, though, once again, we may see the price action aiming, if not even breaching, the 1.0580, a level which provided continuous support here a number of times. So that's pretty valid. On the other hand, should the bulls take over, we may see the price action breaking above the 1.0730 and start paving the way for the 1.0935. Let's have a look now at GBP USD. Okay, interesting chart in the sense that the downward motion seems to continue. Let's connect the peaks. You can see that we have continuous number of lower peaks. One peak, second peak, lower, third one, lower. And that applies also lower throws. The RSI indicator seems to be dropping slightly, but still it's currently at the reading of 40, which may imply also a residue of a bearish sentiment. Should the bears remain in control and actually follow or allow the downward trend line to remain intact, that would imply practically that the price action would have to break below the 1.20. I would require a low throw of this one and start aiming for the 1.1840. On the flip side, should the pair stabilize, we may see the price action breaking the downward trend line. That would be also the first sign of a changing trend, yet remain above the 1.20 support line. On the flip side, should the bulls take over, that would be a little bit surprising, but still that's a possibility, which should not be neglected, but we should cover it. In such a case, once again, we would require clear breaking of the downward trend line we have just mentioned. Once again, first sign of a changing trend. Yet for a bullish outlook, I would require the pair to reach the 1.2265. Definitely a higher peak than this one. Okay, we're abandoning cable now. Let's discuss USD JPY. Oh my god, that's interesting. A nice steep rise of USD JPY. Note how it aims for the 132.85, and that has started since the American session on Friday. Okay, before we discuss anything about direction, let's make necessary corrections. Definitely the 130.90 has to turn now into a support line. One peak here, a little bit off. I'm taking this one. Okay, let's put it all the way up. I'm picking this one. Why? Because practically it describes beautifully the sideways motion of the pair, practically from the, let's have a look. And that was the 1st of December up until here when it dropped considerably, and that would be the 20th. So I think that was an upper boundary for the sideways motion of the pair in that period. I'm keeping that. And it's the red 107.80. Yep. Readjusting the chart. It's a little bit off, a little bit too wide, I know, but still it's quite solid in my opinion. Repositioning the labels. Hundred 129.30, 130.90, 132.85, 134.75, and finally 137.80. Now about the direction of USD/JPY, I have to tell you guys we had a heated discussion with the boys at research about where it's going to. On the one hand, we see that there is a steep upward trend line, which is guiding the pair, and that's since the, let's have a look, 10th of February, that would be since Friday. I would also be noting that there is an RSI indicator which has been on the rise constantly. and currently it's at 63, the 4-hour chart. Both of these two elements tend to imply that there is a strong bullish outlook here. Note also the 3 white soldiers, 1, 2, 3 candlesticks in a row, implying a steep upward movement and exactly implying this bullish outlook. There is a catch here. The catch is that, okay, definitely the pair cannot continue rising without end, but note how the price action has broken above the upper boundary Bollinger Band, which more or less forced it to correct or stabilize a little bit. Definitely, there is a hesitation right now among the bulls. But as long as the upward movement and the upward trend line is being maintained, we tend to maintain also a bullish outlook. That doesn't mean that a correction lower is not in the cards. That could be happening also to USD/JPY, yet that may be shifting the upward trend line slightly to the right. Should the bulls maintain control as discussed, I wouldn't be surprised to see the price action breaking the 132.85 resistance line, a level which provides resistance here, here, and support here. So it seems to be pretty valid. It was also aimed for at this point, just earlier today. Yet a breaking of the 132.85 would be paving the way for the 134.75. On the other hand, note the correction lower right now, which could more or less implying some stabilization on behalf of the pair. It would be interesting to drill to the 1-hour chart. It's in the last hour. It's very, very fresh. Half-hour chart. Yeah. So it's clearly in today's European session. Back to the 4-hour chart. Should there be a stabilization, we would expect the price action to respect the 132.85, or at least finding difficulty, substantial difficulty in breaking it clearly. And that would lead the price action to break clearly the upward trend line. The breaking of the upward trend line would be serving as a first signal of a changing trend. Actually, of a changing of the bullish trend. And that would imply, at least temporarily, some sideways movement bias. Yet should the price action break the upward trend line and start dropping all the way down to the 130.9 support line, see that how it happened a few days back, I wouldn't be surprised to see a bearish outlook emerging slowly but steadily. I would like, though, to have also a look at the daily chart here. You can see that there is a slight sideways motion between the R1 and the S1. It's as if the price action has moved up a step and has stabilized. But drilling back to the 4-hour chart, that could be the prelude for a bullish outlook. Okay, let's have a look at USD/CHF. USD/CHF, which was slightly disappointing in the sense that the release of the CPI rates, let's have a look at that at the time of the release. Back, we're drilling into the minute chart, 1 minute chart, unlocking the chart, 9:30, my time, that would be here. So there was an acceleration of the CPI rates to 3.3% year on year of the Swiss economy. There was a strengthening of CHF, yet note how the following minute the price action rose back up again, dropped a little bit later, and after 15 minutes, there was a steep rise, followed by a drop, stabilizing once again at those levels. So there was some market reaction. However, in our opinion, that was a little bit disappointing. I would expect something more. Let's readjust the chart. The pair seems to remain in a clear sideways motion since let's have a look, since the 18th of January. And the sideways motion is being maintained between the 0.9275 and the 0.9145. So we tend to maintain our bias for sideways motion to continue. Also note how the Bollinger Band, the upper Bollinger Band, prevented the price action from continuing its steep upward movement. And we note that the RSI indicator has dropped, once again reaching the reading of 50, implying a rather indecisive market for now. All of that tends to imply that the sideways motion is set to be maintained. Now, for bullish outlook, we would require clear breaking of the R1 and the price action to start aiming, if not even touch, the R2 0.9405. On the flip side, should the bears take over, we may see the price action dropping, breaking the S1 0.9145. Actually, we would require breaking of the 0.9145 for bearish outlook. And I would also require the price action to start clearly aiming for the 0.9025. And I'm talking about active eye-seeing aiming. So that would mean that it would have to reach as low as this, maybe even lower. Moving out of safe haven currency pairs and moving to commodity pairs, making a start with the Aussie. Once again, sideways motion seems to be prevailing. There were some slight bearish tendencies, but the stabilization in European session today seems to be the main element. We tend to maintain our bias for sideways motion to continue between the 0.7010 and the 0.6880 support line. Should the bears take over, we may see the price action dropping, breaking the 0.6880 and start aiming for 0.6740. On the flip side, should the bulls take over, I would require the price action to rise, break the 0.7010, definitely a higher peak than this one, and thus pave the way for the 0.7130. The RSI indicator is below the reading of 50. It's actually at 44, but relatively stable. Nothing conclusive here. Moving now to USD CAD, which had a wider volatility, but the sideways motion is still prevailing. It's interesting how the pair dropped at the time of the release of the Canadian employment data on Friday. Allow me to drill into the 1 minute chart. Let's have a look at that. Unlocking the chart, widening it. Here it is. A nice steep drop of around 50 pips. Let's measure it. It's at the moment of the release. It's a 50 pips, clearly a 50 pips drop. And note how the pair continued to move at low ground. So practically the gains made by the bears were maintained and should not be neglected. Let's delete the shape. Back to the 4-hour chart. Readjusting. Here you go. So we tend to maintain our bias for the sideways motion to continue in a wide manner, practically between the 1.3025 and the 1.3470, given that the movement of USD CAD, despite the stellar employment data of Canada, failed to actually push it lower below the S1. Should the bears take over, once again, I would require low trade on this one, and the pair to start aiming for the S2 1.3095. The RSI indicator is below the reading of 50. It's actually at 43. Once again, nothing much. Yep, sorry, 40. Yeah, 43. Nothing so conclusive. And I wouldn't be surprised to see the sideways motion be continued. On the flip side, though, note how the price action practically corrected higher after hitting the lower Bollinger Band, which may allow for some further bearish movement, given that the price action now has some distance with the lower Bollinger Band and could allow it to drop further, breaking the 1.3025. On the flip side, should the bulls take over, despite that not being the most probable scenario, but it's still a possibility which should be covered, we may see the price action rising. Definitely, I would require a higher peak than the 1.3470, a break above this level, as it provided resistance a number of times as well as support. So it's a pretty valid level in my opinion, and should that be broken, that would be signaling a bullish outlook. Okay, let's have a look also at, I would like to have a look at oil, and the main reason why is because oil and CAD are interrelated, and we had some interesting movements here. Here you go. Note how, since the Asian session today, the prices of oil have moved slightly lower, allowing for the price action to stabilize, and it's currently testing, if not even breaking, the upward trend line which was guiding the commodities prices. So we may be discussing here about a switch of the trend. And from an uptrend, we tend to adopt now a bias for the sideways motion. Should the S1 $78 per barrel be respected? The RSI indicator, which the forward chart, which used to be at the highs of 66, has now dropped and is currently at 57 and dropping. So that tends to imply that slowly but steadily the bullish effect is fading away in the market sentiment. And that would allow the price action of WTI to stabilize somewhat, possibly above the 78 support line. Should, though, the price action move decisively lower, breaking the S1 78, that would be a signal for a bearish outlook, especially should the price action start aiming for the 73.60 support level. On the other hand, should the bulls take over once again, we may see the price action reversing direction, rising, and start aiming, if not even reaching, the 83.20. Let's have a look at US stock markets. We make a start with NASDAQ. Interestingly enough, the price action has dropped, and at this point I would be readjusting my levels. We have a beautiful sideways movement here. Note how the pair practically found support here and resistance at the same time earlier. I would be noting this true, and we have to find a new ultimate support level, narrowing the bands somewhere here. Okay, definitely this has to turn now into a resistance line. And this to support line. So let's make the necessary corrections in the chart, starting with the labels, with the R3 now being lowered to 13,145. The R2 being placed at 12,825. The R1 being placed at 12,450. Yep. The S1 being placed at 12,220. Pretty narrow. The S2 being placed at, let me have a look, 11,845. And the final support line being placed at 11,550. Now let's discuss direction. We had a nice downward movement, yet that was interrupted. And the support the index found on the 12,220, I think it was characteristic. Given also that the same level provided resistance here and here, I think it's a pretty valid level which should not be neglected. It was actually verified to the downside as a support line earlier today. So that tends to imply that most probably the sideways motion may be prevailing here. And I would be placing it between the 12,450 and the 12,220. Should the price action though rise, break clearly the R1 and start aiming for the R2, which definitely is a mistake. Sorry. Let me correct this. The R1 is correct. The R2 is at 12,825. Okay, guys, we're talking about 700 points here. My bad, sorry. So once again, for a bullish outlook, I would require the price action to rise, break the 12,450 and start aiming for the 12,825. I would be also wanting to see on the daily chart how that looks. Okay, we had 3 continuous red candlesticks and a brick. Back to the forward chart, readjusting. Should the bears take over, we may see the price action dropping, breaking the 12,220 and start aiming for the 11,845. Note how the S1 and the S2 were practically reaffirmed here, and here is the validity. Let's have a quick glance also at Nasdaq, what gold most probably. Okay, there seem to be some bearish tendencies in gold, but for the time being it seems unable to escape its sideways motion, but it's continuously trying to drop The RSI indicator is at 36, implying a residue of a bearish sentiment. I would like to see a clean break testing this to the 1824 level, which may be verifying the bearish outlook here. That should sum it up for the day from all of us here at IronFX. Best wishes for solid trading.
Everyone, my name is Emily and welcome to another educational video. The word Goldilocks is a reference to the popular children's story Goldilocks and the Three Bears. The term is used in finance to describe an economy that is just right with steady growth and normal inflation. It is an ideal economy that is not too hot and not too cold. In other words, it is a Goldilocks economy. In this balanced and healthy economic system, there is full employment, economic stability, and steady growth. The economy is not expanding too much to push inflation too high, and not slowing down to enter into recession. A Goldilocks economy is also good for investing and trading. In a growing economy, companies also grow and generate positive earnings, resulting in their shares performing well. Goldilocks economies are temporary in nature because there are boom and bust cycles. While there may be disagreement among economists about what the exact characteristics of a Goldilocks economy are, the basic idea is that there is a balance between growth, employment, and inflation. The ideal conditions for a Goldilocks economy are low unemployment. Unemployment is measured with the unemployment rate, which reflects the number of people willing and able to work but unable to find gainful employment and who have sought work in the past 4 weeks. The Federal Reserve estimates a normal rate to fall between 5% and 6.7%. Another condition for a Goldilocks economy is asset price inflation, which refers to an increase in prices of shares, real estate, derivatives, bonds, and other assets. Low market interest rates and low inflation are also important, as well as a steady gross domestic product. The GDP is the most essential indicator for a Goldilocks economy, as it measures the value of all services and goods produced in a country and reflects the health of an economy. For example, a negative GDP in 2 consecutive quarters indicates a recession. On the other hand, a sharp increase in GDP can push prices too high and result in high inflation. An example of a Goldilocks economy is the US economy of the middle to the late 90s, but also the US economy after the bursting of the dot-com bubble between 2004 and 2005. Thank you so much for joining us today, guys. See you soon. Bye-bye.
before we start webinar today, I hope everyone is ready to learn. Our topic for today is to know your charts. Okay, hold on, give me a moment. Okay, is to know your chart, which is the Heiken Aishi. So we're gonna be understanding the Heiken Aishi today. Before we start, I just want to remind you guys that today's webinar is only educational. It is for educational purposes. Anything I share in this webinar should not be construed as trading advice. Trading may not be suitable for everyone, so do be cautious, especially if you are new to the game. Okay, if you have questions throughout the webinar, you can ask. You don't have to be shy. The whole point of these webinars is to guide and assist you guys. Okay, cool. I'm going to move on. Okay, so I'm gonna introduce myself, a little bit about myself. My name is Cassandra, you can call me Cass. I am an investment analyst for the award-winning research firm at Fortune Group. I'm also a prop trader. So, I mean, that's a little bit about me in background. I worked in the bank, I worked with the airlines, I was an air hostess, I majored in law, majored in business. But I think more importantly, when it comes to trading, my experiences in trading is that one thing that I am quite proud of is that I have passed multiple prop trading tests. So these prop trading tests, I'm not sure if you guys have heard of it. Such companies are FTMO or MyForex funds. So to pass these tests, you will require a trader would require to do 8 to 10% a month without touching the drawdown of 5% a day and 12% throughout the entire challenge. So I've passed those tests multiple times, and I've used that with identifying key levels of reversals through combinations of supply, demand, and Fibonacci confluence while using trend as my main decision maker. Okay, this is important because our topic for today, which is the Heiken Aishi has a lot to do with trend. Okay, so it's going to be very important in identifying entries. Okay, so our agenda today will be to understand what the Heiken Aishi is. I really don't know if I'm pronouncing it right because it is a Japanese word. The best bet I have is that it's called Heiken Aishi. Okay, I know how to use it, just don't know if I'm pronouncing the name right. How is it different from the normal candlesticks? Okay, how to use it in trading? How can we use this with different indicators? And finally, we will be crafting a strategy using the Heiken Aishi. Okay, any questions so far? Okay, cool. Okay, so what exactly is the Heiken Aishi? Can you guys let me know in the chat box if you guys have even heard of the Heiken Aishi before? Do you know what it is? Do you have any idea? No? Okay, never heard of it. Is the chat box disabled? Okay, hi Christine. I don't think it's disabled. I do see your message. But the funny thing is, I don't know if the others are able to answer me because I've been asking for the last 10 minutes since I started if everyone can hear me clearly, if you guys can see my screen. Usually, you guys are very active in answering, like, yes, I can see your screen, I can hear you clearly, but today no one's answering, so I don't know if there is something wrong with the chat box. but the fact that I can see Christine's answer means that it should be okay. Okay, now I see Victor's answer. Okay, thank you. Brian. Okay, Brian was saying that he did answer, but I wasn't responding to his answer. So I'm guessing the chat box is not working well, but you guys are talking to me on the Q&A session. So with Zoom, there's two places that you can send in your question or you can talk to me. One is via the chat. Okay, so I'm guessing you guys were talking to me through the chat earlier on. That's why I wasn't seeing your response. And now I see Christine, Victor, and Brian answering me on the Q&A section. So if you guys have any question, just go straight to the Q&A box and ask in the Q&A box. Okay, thank you, Victor, for clarifying that you can hear me and you can see my screen. I was so worried the entire time. I wasn't sure because usually you guys would have answered me by now. Okay, so what exactly is the Heiken Aishi? So Heiken Aishi also spelled with an E sometimes. So it's sometimes spelled with Heiken. Ashi means the average bar in Japanese. So it literally means average. A lot of what I'm going to share with you guys in the front part of the webinar will be a bit confusing. It was confusing for me as well when I just learned this, but it's not important. More importantly, you need to know how to use the Heiken Aishi. Okay, so it's going to be confusing, but it's okay. It's more to like, it's good to know. The information I'm sharing is just more like good to know. Towards the end of the webinar, when we craft our strategy, that is the important part. That's the important part because then you will learn how to apply the Heiken Aishi. So the Heiken Aishi technique can be used in conjunction with candlestick charts when trading to spot market trends and predict future prices. So how Heiken Aishi is used, for me especially, I mean, I'm sure there are many ways to use it for different traders, but how I use it particularly is to spot trend. It is so crucial. You know how a lot of time price is going in an uptrend, it's going in a constant uptrend or it's going in a constant downtrend. For example, I can give you guys XAUUSD right now, gold. Gold has been going in a downtrend for the longest time. Okay, another one is EURUSD. The euro has been going down in a downtrend for the longest time, right? So the Heiken Aishi can actually help you spot that point of reversal and get in at the reversal. So as it's going down, it will make a reversal to make the recovery to go up. Using the Heiken Aishi, you'll be able to spot where to get in for the buy. Okay, sorry, I do see messages here. Let me try to figure this out. Okay, cool. Okay, so it's useful for making candlestick charts more readable and trends easier to analyze. For example, the trader can use Heiken Aishi charts to know when to stay in trades, when a trend persists, but get out when the trend pauses or reverses. Okay, so we're gonna look at examples for that later. Most profits are generated when the markets are trending. So predicting trends correctly is super necessary when you are using this technique. Okay, let's move on. So this is the normal candlestick pattern, and you can see this is the Heiken Aishi. I know it looks like when you look at the structure of it, it looks quite similar, as in you can see there's a low here, you can see price did a swing low here, you can see price did a swing high here. But if you look closely, the difference with the Heiken Aishi and the normal candlesticks is that the Heiken Aishi starts in the middle of the last candle. Do you see? So it's very confusing for people who only know the normal Japanese candlesticks. So normal Japanese candlesticks, you can see that, for example, the close was here, right? The close was here and the open is just next to it. There's rarely a gapping when it comes to Japanese candlesticks. But with Heiken Aishi, no matter where the close and start is for the normal candlesticks, with the Heiken Aishi, you can see that the start is usually in the middle of the last candle. Okay, it is more often not in the kind of like the center of the last candle. So it can be confusing for people who don't understand this candlestick, this type of candlestick or way to read the charts. Okay, so I'm going to explain a bit the textbook meaning for Heikin Ashi and a little bit of understanding. So the Heikin Ashi is the type of price chart that uses average to show the price movement of an asset. This chart used as a form of technical analysis to look at the asset's price movement with regards to overall trend. By being able to see the overall trend more clearly, you can make a better informed decision about whether to enter or exit a trade. Like regular candlesticks, the Heikin Ashi candle will display 4 different price level, which is the low, okay, the highest point, the opening, and the closing of the candle. But it will use data from a current and previous session to derive the values. That being said, the Heikin Ashi charts can be applied to the same time value as regular candlesticks charts, making them useful as part of a scalping, day, or position trading strategy. A lot of people also use it for swing trading, as can be seen in the below. In this comparison, the Heikin Ashi have a smoother appearance than regular candlesticks. Okay, it's smoother because it always just starts in the middle of the last candle, or somewhere in the middle of the last candle. Okay. Okay, so what is the Heikin Ashi formula? Why does the candle start in the middle of the last candle? So the Heikin Ashi formula is a method used to calculate each candlesticks on the chart. Some of the formulas or calculations are more complicated than those used for a standard candlesticks. Here's simplified version, okay, of how to calculate the open, close, high, and low for Heikin Ashi candlesticks. So the open, which is here, the open of the candlesticks, it is the equivalent to the open of the previous bar. So you need to get the information from the previous candlesticks, okay, plus the close of the previous candlesticks, and you divide that information by 2. Okay, so okay, let's pretend this is the current candlesticks, this is the open. So you're getting the high and the low, the open and the close, and then you're going to divide that by 2. The answer of that will give you the open for the next candlestick. Okay, that's why the HA, the Heikin Ashi, always starts in the middle of the last candlesticks, or somewhere in the middle of the last candlesticks. Okay, because it is just like the average of the last candlesticks. Okay, so the close will be the open, the close, the high, and the low of the current candlesticks, and you divide that by 4. Okay, again, for those who are confused, don't worry, you don't really have to remember this. Whatever I'm sharing is more like, it's just good to have, like, it's good to know, right? It's good to learn this information, but it's not like crucial when you're doing charting. Okay, so the high is the maximum value from the high and open or close of, hi Simone, I see more and more people joining, the current period, and the low is the minimum value from the low, open, and the close of the current period. So how do you read a Heikin Ashi candlesticks? When reading a HA candlesticks, you look at their wick, body, and color. Okay, so the color, it's either green or red. Okay, the wick, you need to know if the wick is on the top of the candlesticks or the bottom of the candlesticks. I know right now it just looks like both sides had a wick, but later on I'll show you more examples where the Heikin Ashi only wicks on one side. So it usually wicks on the upper part of the candlesticks or the lower part, and the other side that doesn't wick is usually flat. Okay. And the body. Okay, so the top of the upper wick is the highest value of the candle, and the bottom of the lower wick is the lowest value of the candle. The body is the difference between the session's open, close prices. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. Okay, everyone good? Everyone following? Is this too confusing? for those who are like a little confused, you don't have to worry. Like when we go to TradingView later, you see how there's actually so many different types of candlesticks patterns. This is just one of it. It's a very useful way to trade, but it's just one of it. Okay, so how to use the Heiken Ashi chart? There are a few ways to trade using the Heiken Ashi chart. First, understand each candlestick will tell you something about the price trend. For example, a long-bodied green Heiken Ashi candle with no lower wick. Okay, you can see that the wick is only on the top. There's no lower wick. Is considered indicative of a strong upwards trend. Do you see how this is so different from the traditional Japanese candlesticks? If this was the Japanese candlesticks, if you see a long wick on the top, you will immediately think, oh, there is a rejection. There's a rejection, that there is weakness. That's why the candlesticks is making this long wick. Okay, it is rejecting. There is a bearish rejection, and you might be thinking, oh, the bearish momentum may be strong. Okay, it is totally the opposite for the Heiken Ashi. The Heiken Ashi is when you see the wick on the top side rather than the bottom side, that is an indication of strong uptrend momentum. Okay, so it is opposite from your traditional Japanese candlesticks. Okay, and this is very important because this is what you use to identify trend when you are trading. Okay, so traders who have bought into the market might use these Heiken Ashi signals as indication to hold on their position in an attempt to maximize gain in an uptrend, because once you see this wicking on the upside, you will see, okay, you will think to yourself, okay, strong bullish momentum, right? Strong bullish momentum. So what you're going to do is you're going to see the next candlestick. If the next candlestick also shows another wicking on the upside, it just means, okay, continuation of that strong bullish trend. And then another one is just confirmation of another strong bullish trend. So the Heiken Ashi, again, like I said, is very, very useful in identifying trend. So you use it to continue playing the trend, or you use it to get out when you see a trend reversal. Okay? Everyone good for now? Okay, cool. I'm going to show you the next example. Okay, so this is an example of how the Heiken Ashi would look like on the charts. Okay, so you will see wicking on the upside. The upside, this is confirmation of bullishness, confirmation of bullishness. So you keep holding your buy entry, right? You keep holding your buy trade. You hold your buy trade, you hold your buy trade, you hold your buy trade until this doji looking thing, or this spinning bottom, spinning top looking thing comes out. And then you see a wick at the bottom side of the candle. That is Heiken Ashi's first sign to you as a trader that, hey, the bullish momentum is weakening. Okay, the uptrend momentum is slowing, or there may be a possible reversal. Okay, and then you see the next candle, and the next candle, true enough, it turns red. Number one, it turns red. Number two, the wick appears on the bottom of the candle, signaling and confirming that yes, the bullish momentum has ended and now the bearish trend may have started. Okay, so this is exactly how you use a Heiken Ashi in terms of playing the trend. I really love the Heiken Ashi, honestly. It's very, very useful. Okay, so let's move on. Okay, so this is another example. You can see really strong downtrend, wicking on the bottom part, which is confirming the downtrend. Bearish momentum, bearish momentum, bearish momentum, bearish momentum, bearish momentum. All the way you can see all this bearish momentum. And suddenly this doji looking thing, or spinning bottom, I would say, candlesticks appear and you see a wick on the top side. Okay, this will suggest, this is the first suggestion. It's not confirmed, of course, it's not confirmed, but it's more like a suggestion from the Heiken Ashi that, okay, trend, that downtrend may be ending, okay, and it is losing momentum, and there is a possible trend reversal. Okay, so the next candlestick comes out, you see the wicking on the bottom side, you're like, no, maybe it was a false alarm, right? And then you see another candlestick, same doji comes out, which gives you another signal. If I was the trader looking at this trend and I see this, I would definitely get out here. This second one was my second warning to tell me that there's a trend reversal. So I will get out and I'll just take my profit, right? There's no point of risking. Okay, so let's move on to the next example. Okay, this is not example. Okay, so to sum up what we've learned with the Heiken Ashi, the Heiken Ashi chart is a type of price chart that uses daily average to show the median price movement of an asset. Secondly, the regular candlestick display 4 different price levels of an asset in a specific period, but the Heiken Ashi candlesticks use data from the current and previous session to derive their values. The Heiken Ashi charts can be useful as part of a scalping, day, or position trading strategy. And when reading the Heiken Ashi candlesticks, the high is the highest value of the candle and the low is the lowest value of the candle. If the candle is green, the closing value is greater than the opening value and is represented at the top of the body. If the candle is red, the closing value is lower than the opening value and is represented at the bottom of the body. So the long-bodied green Heiken Ashi candle with no lower wick is considered indicative of a strong bullish trend, and a long-bodied red Heiken Ashi candle with no upper wick is considered indicative of a strong bearish trend. So because the Heiken Ashi candlesticks show the directional market trend, it can be useful to apply trend indicators, which I will show you later how we can apply trend indicators in order to identify the strength of market momentum. Okay. Okay, we're gonna create a strategy. We're gonna move on to TradingView to create our strategy. If you guys have any questions, do ask in the chat box. Don't be shy. The whole point of these webinars, the whole point IronFX created these webinars is to help you guys grow your account. Okay, so if you have any questions, go ahead, just shoot. Okay, so let me just pull out what I wanted to show you guys. Okay, so for those, right, who don't already have an account with us, you can head over to vip.ironfx.com/app. Okay, if you don't already have an account, just go to register now. You can create an account as long as you have an account with IronFX. You need a minimum deposit of $250 and you will be able to create this VIP IronFX account. So let's log in. Okay, so what is the benefits of having this VIP room access for IronFX? If you're a bronze, you get to create an account, which is a minimum deposit of $250, $1,000 or $2,000. You get an account. Silver is $1,000 and gold is $2,000. Okay, so what is good about this is that every day we will update this chart. So you can see here, we will update this chart's we'll update the fundamental news. So we'll update, for example, Euro news. So we'll say like the Euro USD rose noticeably higher to finish the trading week. We'll just update on like every day. The last time we updated was Monday. Okay. Then we've got GBP, we've got USD, JPY. Can we obtain the indicators? How can we obtain indicators? I will show you how to use indicators in a bit. We'll be going to TradingView in a bit. Let me just show you the IronFX VIP group. Okay, so on top of that, we also have all these major pairs, commodities, indices, cryptocurrency, forex pairs. Okay, if you just click into any of them, you will see that we do update regularly. We will show you guys like, hey, price is still testing the key support level at blah, blah, blah. So we'll update information about any particular chart. And if you are new here, the good thing about this is because we have so many traders, right? We have a lot of traders on this platform. So you can just like ask one of our pro trader, for example. Let me show you guys. For example, you can ask trend line. Okay, you can draw a trend line, and then you can ask one of us, hey, Desmond, or maybe hey, Cass. Sorry. Hey, chief trader, or whoever it is who sees your message. Is this a valid trend line? Okay. And then now you can highlight the trend line. You can highlight the trend line, link object text, and click on this trend line. Click confirm, press enter, you send it. So whoever that was tagged, you can tag Desmond, you can tag me, and you say, is this a valid trend line? Whenever I come back, so even if this chart was deleted, if I hover my mouse over the trend line is going to appear. Okay, so that I can assist you. So then when the chief trader sees this, the chief trader will reply to you, hey, so-and-so, this is not a valid trend line because a valid trend line requires 3 touches. But in this case, this trend line only has 2 touches and therefore it is not a valid trend line. Okay, so you can get all the help you need just by creating an account on the VIP, the IronFX VIP room. It is free as long as you have an account with IronFX, and as long as you have a small deposit of $250. Okay, cool. Okay, on top of that, the other thing I want to show you guys is that for those who are new here and needs help with trading, especially the basics, please head over to our YouTube page. Okay, just type IronFX on YouTube. We have a lot of videos where we teach you guys like the basics, like it even comes in like different languages. Okay, so we'll teach you things like moving average, for example, or Heiken Aishi for today, the total trading strategy. Okay, so there's a few different things going on. You can just come and explore. It will help your trading a lot. Trust me, I was once a new trader as well, and I wish I had this kind of resources. Back then, I didn't know where to find this kind of resources. I didn't even think to come on YouTube. Instead, I went on to those really expensive courses where I need to pay like thousands and thousands of dollars to learn like really simple things like moving average, for example. Okay, so do head to our YouTube. We have a lot of information there. It's completely free. It will help your trading a lot. Okay, so next, let's move on to trading view, where I show you guys how we can use the Heiken Aishi. Let's choose gold, for example. Okay, let's use gold, for example. We're gonna go, because today's topic is Heiken Aishi, so we're not going to be using your normal candlesticks pattern, okay? We are going here, candles, click on candles, click on Heiken Aishi. So there's different kinds of candles that you can use. This candle is the traditional Japanese candlesticks. We've got bars, okay? We've got the line chart, we've got line chart, we've got baseline, we've got high and lows, line breakouts, Kaji, but today's topic is Heiken Aishi, so I will show you guys how to use Heiken Aishi. Okay, so click on Heiken Aishi. It looks similarly to the traditional Japanese candlesticks, but again, it's different. How? Because it starts in the middle of the last candle, and we already know why that is. It's because you take the high and low of the last candle and you divide it by 2, and that will be your opening for your next candle. Therefore, it's always going to be somewhere in the middle. Okay? Everyone following? Do I need to repeat myself? Everyone good for now? Okay, thank you, Joash. Okay, so let's zoom in because this is really important. The way that you use Heiken Aishi on its own, I will never recommend using a candlestick pattern or a candlestick on its own. Never, ever. You always have to combine it with other things. Okay, always combine it with trend, support and resistance, Fibonacci levels. Please share screen. Thank you. Oh, do you guys not see it? Okay, can you see it now? Thank you, Christine. I'm sorry, I didn't know how long I was talking to myself for. Do you guys see the screen? I thought when I switch screen, it will automatically share. I didn't realize I have to keep sharing screen. Sorry about that. Okay, thank you so much. Thanks, Christine. Okay, so I'm gonna start all over again. So to get the Heiken Aishi, go to this area here. It will say, let me just go back to your normal. Okay, it will say, go to any particular chart. It will say candles, and then you get to choose your different kind of candlesticks that you want to look at. So we've got the bars, candles, hollow candles is your traditional Japanese candles, right? We've got the baseline, the line chart, Renko, line break, Kaji, these are all the different kinds, but because of today's topic, we will be looking at the Heiken Ashi, okay? For today's topic, we will be looking at the Heiken Ashi. Again, it looks like your traditional Japanese pattern, but the only difference is that it starts in the middle. The opening is always somewhere in the middle of the chart. Why? We have already established it's because you take the high and the low of the last candle, you divide it by 2, and you will get the opening for the next candle. Okay, therefore it will always start in the middle, somewhere in the middle of the last candle. Okay. Okay, so just to test you guys a little, to see if you guys were following earlier on, I just want to check if you guys remember if the wick of the Heiken Ashi candle is on the top part of the candle, does that signify bullish or bearish momentum? Can you guys let me know in the chat box so I know if you guys are still following, if I need to repeat anything? If you see the wick of the candle on a Heiken Aishi candle on the top part of the candle and the bottom part has no wick, does that signify a bullish or a bearish trend? Thank you, Christine. Thank you, Joash. Okay, thank you. At least you guys were following. This is really important. Okay, so I'll give you an example of how to use the Heiken Aishi. But of course, whenever we are looking for a setup in trading, we never ever just use one thing to look for our entry, our stop loss, and our buy. We always combine it with other things, of course. Always combining with other things. Okay, so if let's say I was already in this buy here, I would see this long wick here. I would think it's a bullish momentum, bullish momentum, bullish momentum, bullish momentum, bullish momentum. I will hold on to this trade until it gets to this doji looking candle, this doji candle, and that's where I get out. Okay, so that's just an overview of how you use the Heiken Aishi on your own one rough way. Now I'm going to show you guys how I use it with my other strategy. Okay, by combining other strategies. Okay, so let's go to the day chart. This is exactly how on a normal day I use to look for a setup. Okay, so as of today is the 16th of November. I am currently 4% in profit in my own trading account. Okay, I'm 4% in profit, and whatever I'm going to show you guys is exactly how I got my 4% in profit. Okay, this is exactly how I would find a trade when I'm trading on a daily basis. Okay, so first of all, I will look for trend. Trend is very important. I feel like looking for trend and identifying trend, you already win half the battle. Why? Because if you identify that it is a downtrend, it means that you are biased to get in for a sell. Okay, if you identify that it is an uptrend, you are immediately biased to get in for a buy. Okay, so you first need to identify a trend, and you need to identify it on a bigger time frame, so that when you go down to a smaller time frame, you can narrow down and fine tune where you think your entry is going to be. So how do you identify trends? Simple. The first things first, use a trend line, use a channel, or you can look for lower lows, lower highs, higher highs, and higher lows. Okay, so in this case, a price was moving on a downtrend for the longest time. Okay, so I'm just going to use this trend line to identify the downtrend. And the fact that it's on a lower, it was making lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. It's confirmation of that downtrend that we are talking about. Okay, so one thing that I've noticed is that this downtrend has recently been broken by the recent candle structure. Okay, the recent movement in price. So the thing about not using Heiken Aishi or using candlestick pattern is that usually the traditional way of TA, or the different way of TA, is that traders, okay, so this is a swing high here. When price breaks this trend line and it breaks this swing high here, that is only when the trader confirms, that the uptrend has started and the downtrend has ended. Okay, the problem with this technique is that from here all the way to here, you have lost so many points. Okay, you have lost so many pips. Your entry would have been so late. But if you were to use the Heiken Aishi, right? You use the Heiken Aishi. So the Heiken Aishi, remember, if the wick is at the bottom and the candle is red, it is a sign for bearish momentum. If it's green and the top part, the wick is on the top, it is sign for bullish momentum. Okay, so one thing that the Heiken Aishi would have already told you is that here, in this candle here, is already the possible trend reversal. Okay, why? Because the candle before it, there was wicks on both sides. Whenever there is wicks on both sides, when it comes to the Heiken Aishi, this is the first sign of trend reversal. Okay, this is the first sign of trend reversal. And then how do you confirm that trend reversal? The trend reversal is that the wick is on the top part. So you would have gotten in here for a buy based on Heiken Aishi's confirmation. You got in for a buy, the wick is still on top, the wick is still on top, the wick is still on top. Until today, the wick is still on top. So from somewhere around 1666, okay, 1670, for example, you would have already been able to identify the possible trend reversal. You would have already been in this buy trade, and right now you are still in profit for that buy, and you are still not taking profit yet because Heiken actually has not told you to come out from that trade yet. Okay, so that is the beauty of Heiken Aishi. Heiken Aishi is that thing that is able to help you identify trend reversal before all the other things like the break of the swing high, the break of another swing high, okay, all these other things. Okay, so let's combine Heiken Aishi with all the other things. Okay, so how I would have gotten into this trade is that I would have, of course, already identified this trend line. First, I identified this trend line. Sorry, I wouldn't even use a trend line. I would actually use a channel because a channel would be valid in this case, right? That's a really beautiful channel. The break of the channel is my first sign of trend reversal. Okay, this break of the channel is my first sign of trend reversal. But when it just breaks, I'm not confirmed, right? It's not confirmed. So what I want to do is look for more confirmations, because a lot of times it could have just been a fake out. It could be a fake out break and it just comes back into the channel again. Okay, in this case, it wasn't. Okay, so the first confirmation was Heiken Aishi showing wicks on both sides. Second is that the wicks start appearing on the top side of the candle. So channel is showing bullish momentum, a trend reversal. because of the breakout channel. Number 2, Heiken Aishi is confirming that. Okay, let's see what else. Number 3, the break of this swing high is further confirming. If price continues to go higher, if it breaks this swing high here, that is even further confirmation that price is definitely reversing, doing a recovery, and gold is on its way up. Okay, so we're going to wait for price to break this 1798 area. This is a very crucial area. If it breaks here, this is going to be our entry for the buy. Okay, guys, just take notice for future reference. It's not going to be today because I don't think it's going to break today. It doesn't look like it's going to break today. Maybe next week. Okay, this is a very important area. Okay, so after I have identified trend, I'm going to highlight some support and resistance. Let me highlight some support and resistance. Why is support and resistance so important in trading? Support and resistance is your entry, stop loss, and take profit. Okay, support and resistance will be used as your entry, stop loss, and take profit. It is so crucial to be able to identify support and resistance when you are charting. If you cannot master support and resistance, I would think that you are losing a lot. Okay, there's probably other ways to trade, but from my trading experience, I find that identifying support and resistance will win you a lot of the battle. Okay, we've got that. Let's go down to the smaller time frame. Now, what we're going to do is combine. Okay, we're going to combine give me a sec. Okay, before I continue, I want to let you guys know that before this webinar started, I actually placed an order, right? I actually placed an order for a sell at 1785. Okay, why? Because there is a strong resistance here. Okay, so for those who want to consider that sell, I'll let you know in a while why I got into that sell, but I'm letting you know that it's in that area of that sell right now. Okay. Okay, cool. Going back to the Heiken Aishi. Once I have identified that, I've identified trend. I'm right now currently very biased on getting in on a buy. Because why? Because momentum is showing me that it's a buy. The break of the channel is showing me that it's a buy. The break of the swing high is showing me it's a buy. Heiken Aishi is currently showing me it's a buy. So right now, the problem about wanting to get in the buy is that price is already on its way up. So what do we do? The good thing about trading is that price never moves in one direction. Okay, it never ever, it is so rare that price moves in one direction. It doesn't, never forever. So right now it's going up. What is it going to do? More likely or not, it's going to reach a point where it wants to do a reversal, a little pullback. It does a pullback, and that's where your Elliott wave comes in. That's a topic for a different day. Okay, your Elliott wave comes in, and here at the pullback, you get in for your buy. Okay, you get in for your buy here at the pullback. Okay, so where do I think the pullback will be? I think it's at 1720. I will show you guys how I get that number. Okay, so one thing I like about the Heiken Aishi right now is that it is showing reversal signal. Okay, do you see 1, 2, 3, 4, 5, 6? 1, 2, 3, 4, 5. Sorry, 5 candles have shown wicks on both sides of the candle. So again, remember, wicks on both sides of the candle is your first signal from Heiken Aishi that a reversal might be happening. So this area here, okay, Heiken Aishi might be saying, okay, that's enough. It's time for me to reverse now. And the pullback might be happening soon. Okay, so this is where the pullback might be happening. I will be I'm a bit biased to get in for a sell right now. Okay, we're gonna get into a sell, but my overall trend is a buy. And how do I get my take profit? I go back to the normal candlesticks and I find the swing low, the closest swing low. That's gonna be my first take profit. Okay, this is going to be my second take profit if price even gets here, right? If price even gets here, that's great. But if it doesn't, that's my first take profit. This is my second take profit. And either from here, price is going to reverse and continue on its uptrend, or it's going to go down lower and it's going to continue on its uptrend. Okay, whatever it is, because we are just day traders, I'm only going to kind of forecast or kind of want to see where price is going from here to here. Okay, so let's go back to the Heiken Aishi. The day chart. So Heiken Aishi is agreeing with this analysis. Why? Because again, you can see Heiken Aishi is already signaling reversal. Okay, that's one. Number two, it's because if you go back to the normal candlesticks, you can see price tried to come here a few times and it was having a hard time breaking. I don't know if it's gonna break this time, but if it does, then this sell entry is gone. But based on the Heiken Aishi, so far it looks good. It makes me want to believe that there's a possibility that's going to reverse from here. Okay, other thing that I am doing that is supporting this analysis is combining this with Fibonacci levels. Okay, so whenever you do an analysis, 1.389, sorry. Okay, so the 1.45 fits nicely there. Although 1.45 is not a level that usually price reverse on, it is still a level to consider. Let me see what else I can combine there. So what I'm trying to show you is that how to find a setup is to combine different technical analysis, which I will not be able to teach you guys in one webinar today. You have to come back if you want to learn the rest of it. You're going to combine all of this together. And then the area with the highest confluence, okay, is the area you get in for your entry. Your take profit is where the last swing high and swing low is, and your stop loss will just be above that area you think price is going to reverse. Okay, so right now I'm biased that price is going to go down. I will show you guys in a while why I think that. Okay, no, Ichimoku is not agreeing. Stochastics. Okay, we can use stochastics. Stochastics is kind of agreeing. Okay. Okay, guys, I'm gonna run through again why I think it's a sell. Okay, so number one, overall, I think gold is a buy. Okay, overall, I think gold is an uptrend. Why? Because of the break of the channel and the break of the swing highs, the swing highs here and the break of things. But the thing about any chart is that it never goes in one direction. Before it keeps going up, it needs to pull back once in a while. Okay, so I am expecting a pullback. Why? Because a pullback meaning we're going to get in for a sell. Because number one, for our topic for today, Heiken Aishi is showing that there might be a trend reversal. How is it showing that? Again, I said because when they are wicking on both sides, that is Heiken Aishi's first sign to you as a trader that there may be, I'm expecting a pullback as well. Okay, nice, Musa. There may be a possible trend reversal. Okay, so Heiken Aishi is already signaling to us, yes, there might be a trend reversal in this exact area that we're looking at right now because of the 1, 2, 3, 4, 5, 6 candlesticks that looks like a doji or looks like a spinning bottom. Okay, number two, why do I think that it's going to be a pullback? there is a Fibonacci level here. Okay, so I don't usually take you guys for these webinars. Okay, so you probably would have never heard me give you this analogy. Okay, so this is a very important analogy. I use it every time when I'm training. I think about it very often. Okay, so pretend this is you. Okay, this is a really badly drawn statement. You're going in the direction, you're going in the right direction. Okay, you're going right, you're walking to the right, you reach a door. The question is, if you can push the door, you can go into the next room. If the door is too heavy, if the door is made out of titanium, if there's a lot of rocks, there's a lot of boxes, there's a lot of obstacles behind the door will be, or if the door is locked, the door will be too heavy and you will have no choice but to reverse. Okay, but to reverse. Okay, so this represents price. The man represents price. The direction represents up or down, whether you're buying or selling, and the door represents support and resistance. Okay, so price right now is at our door, which is the resistance. And I do identify that there is some form of resistance at this door. Okay, why? Because number one, there's 145 Fibonacci extension here. Although 145 is not a typical level that we look at, okay, it is also still something we should be considering. Okay, so I'll give you an example. Let's say in real life, you reach a door, you're trying to open the door, and you're wondering, oh, how come I can't open the door? Turns out on the other side of the door, there is a tiny lock. Have you seen those really tiny lock, those toy locks that you can break open with your hand? Okay, so this 145 Fibonacci extension represents that really weak, fragile lock. Although it's not a very strong Fibonacci level, I'm still going to leave it there just to say that there is some form of resistance. So that being said, I do think price is at an area, is at a door, and price is trying to push this door open. If price is able to do that, then it's going to break and price is going to go higher. But if price is not able to break this door, it has no choice but to reverse, right? Okay. Why do I think it's going to reverse? The resistance that are showing right now is the candlesticks showing that reversal pattern. Number two, the Fibonacci level. Number three, there was something else. There is a little form of support and resistance in this area. Okay, it's not the best horizontal support and resistance, but there is some kind of support and resistance here. Okay, because we can see that price came here a few times. Every time it came to this area, it came here, it reversed. It came here, it reversed. In this area, I didn't respect. It came here, reversed. So now it's back in this area. Is it going to reverse or not? We don't know. But so far, the chances of reversing is it's there, but it's not the best. Okay, so the next reason why I think price is going to reverse there is because on the stochastics, we are seeing that price is reaching a resistance. So how we use stochastics is we identify support and resistance. It is now at a resistance. We expect it to reverse at a resistance. Okay, that's as simple as that. When I look at this setup, how confident am I that this setup is going to work out? I'll be very honest. I don't think this is a very strong door. I think there is some kind of resistance in this door. But if this person here is strong, that means if this bullish momentum is strong, it will not have a problem breaking this door here. They will not have a problem breaking this resistance, and it's going to go higher. Okay, but that being said, the Tenkan Aishi is already showing weakness in the momentum. Okay, it's showing that this person that is pushing the door is maybe tired. Maybe he already pushed a lot of doors. Look, he already broke this channel. He already broke this swing high. Maybe he's tired. So by the time he gets to this area, he needs a little break, and he might just reverse to this area. And then from here, he'll try again once he's fully rested, right? But this current point of time, we are seeing weakness in that bullish momentum. Again, take note that my overall bias is that price is going up. Price is bullish. It's just that at this current point of time right now, there is some form of weakness. So you can consider getting in here for a sell. I personally have a pending order ready at 1784, okay? Because I think the bullish momentum right now has weakened, and I don't think it can break. I may be wrong. If I'm wrong, then I'll just hit my stop loss. That's totally fine. I'll just move on to my next trade. So the thing about trading is there's nothing to do with like a feeling. There's nothing to do with, oh, I feel like price is going to go up or down. You just collect whatever information, technical analysis or the charts is showing you, and then you make a decision. So based on all the decisions that I've collected, I am a little biased that the bullish momentum has weakened and there's a possibility of a short pullback, a very short pullback, okay? A short pullback means that if you get in here for a sell, don't expect it to go back down to 1,500, okay? A short pullback means a very short and small move. It's just enough for you to make some profit, and then move on to your next trade. Okay, so let's say this trade were to work out. We are looking at a let me see what's the risk to reward. Because our stop loss is so tight, our risk to reward will be somewhere about 1 to 2, okay? 1 to 2. That means if you have $100,000 account, you're risking $1,000 to make $2,000. So if price really goes to our stop loss today, we'll be losing $1,000. But if it goes to our take profit, we'll be making $2,000. Okay, so these are the kind of trades that you will be able to get. Honestly, if I have to rate my confidence level in this, I would say it's only a 60%. Why? Because usually I don't like taking trades that are going against trend. So right now the trend is definitely bullish, right? We are very biased that price is bullish. Okay, we are biased that price is bullish for sure. So going in for a sell is like going against the wave. So if you are taking this trade, please be super cautious. I do have a pending order here, but my lot size is smaller than what I would usually risk. Okay. Usually I will risk 1% per trade, but because this trade is going against trend, my risk becomes 0.5%. So let's say I have a $100,000 account, I'm risking $500 to make $1,000. Okay. And that's exactly how you would be able to find a trade using the Heiken Aishi, which is right here, combining it with indicators, Fibonacci levels, combining it with trend, combining it with other things. Okay, I hope to see you guys tomorrow. I will be taking you guys for the live trading analysis session. The live trading analysis session, I won't be using Heiken Aishi. I'll be using the strategy that I normally use. I do use Heiken Aishi once in a while, okay, but then I usually on a daily basis, I just use the traditional Japanese candlesticks. Okay, look, the traditional Japanese candlesticks is showing bullishness, okay, but Tenkan Aishi was showing bearishness. Okay, so I will see you guys tomorrow. If you guys are joining, hopefully we get to find some trades tomorrow. Hopefully we get to make some shopping money tomorrow. I'll see you guys tomorrow. Bye guys. Thanks for joining. Bye.
Session today, we want to continue with trading insights about silver and look at what affects the price of the precious metal. Silver prices are not easily influenced or affected by political or economic events. This is because it is viewed as having an inherent value, meaning that its value is protected against times of financial stress or political instability. When compared with gold, the price of silver tends to be much more volatile, while a much higher proportion is used in industry than the yellow metal. The price of silver is dependent on supply and demand. In terms of supply, silver has the largest volume compared with other precious metals. Meanwhile, the mining of silver has substantially increased over the past few years and is often a co-product of either mined minerals, such as gold and copper. Due to its wide use in industrial fabrication in products such as conductors, switches and fuses, silver prices can be affected by industrial output levels in terms of production volume. The price of silver tends to follow the price of gold. Although this is not set rule or formula, there is some evidence that a price correlation exists between the two precious metals. As the world's leading currency, the US dollar has an impact on the price of silver. The price direction of the dollar has an inverse effect on silver, meaning that the precious metal can be an appealing investment when the dollar is low. Thank you for watching. This third part completes our series on trading silver.